Strategist with ATFX. If you're in the chat box, you're most welcome to say good morning or hello. It's very straightforward. Um, just need to have an account with YouTube, and that allows you to write in the chat so you can ask questions about the markets or anything else that might interest you. You can also like the video and share it. So please do so if you like this presentation. Okay, good. So let's just take a look at the markets, and we're gonna begin with general market overview and what's going on in the markets. Well, there's not too much going on right now, at least when it comes down to all the major markets. The Aussie dollar was down quite a bit at one point. Let me just do something here. Was down quite a bit at one point, and that's because of the RBA minutes published overnight. I think the market was down with about a quarter of a percent, but since then has bounced back. Euro is pretty much unchanged, GBP as well, dollar yen as well, and at the end, even the Aussie dollar is unchanged. New Zealand dollar is up a bit, unchanged, unchanged, unchanged. It's only crude oil that's sort of challenging a bit of his downtrend. The stock markets as well, pretty much unchanged. German DAX is down a tiny bit. Dollar index. So it's really not too much not a huge difference really. But let's prepare, because usually when it starts to get quiet, or it has been quite some time in the market, and usually when it gets quiet after a while, then the market just starts trending. A very good example of this is actually cryptos, where Bitcoin was quiet for a long time, and people were writing lessons about it. Even myself, I was doing coverage of that quite often, and then the market sort of didn't do nothing for like a year or so. Not properly do something for, was it a year? Was 6 months? I don't remember. Yeah, from pretty much after that big slide in November, and then I just trade sideways from pretty much 4 months, 4 or 5 months. And then we had that little break that we actually shared here. So we talked, this is a logarithmic chart, that's why it's look different, but we talked about this move here, that the market can go up with 25%. But then after that, Bitcoin just continued to gain and added another 60%. Yes, 60%. Let's get rid of that log. You can see it better like that. So it's the same thing with the euro dollar. It's just extremely boring right now. Not much is happening. Maybe trade wars is gonna create a massive move in the market, or for some other reason we're gonna have some move. So this is not gonna continue forever, even though it's been going on for a year. It's been not a good time to trade forex, really, I think. So, but then after that, things hopefully gonna start trending. Right now, it just looks awful. There's not a lot happening. So, what I don't want to be just doom and gloom when in regards to trading. The trick here, of course, is to be clever about it. Like, a lot of people hate the cryptos. They don't understand why people buy them. But who cares why people buy them? We're not the buy and hold sort of investors. This presentation is also not a buy and hold sort of market update. It's a trading update. And half of the time when we trade on rumors, right? Donald Trump is gonna do this, or the Federal Reserve is gonna do that, or the RBA is gonna potentially this. There's always speculation in the air. It's always about getting involved, because when something gets confirmed, it's really sort of over most of the time. Not always, but at least in the short term, it's over. Not always, but most of the time. So the trick here is that we're speculating, right? And it's the same thing with cryptos. Like, who cares what's going to happen with it in the long run? If you were clever enough to buy it around 4,000 and now it's at 8,000 or even 3,500 or so, and now it's like 8,000-ish, you got your money. It took like a week or, well, yeah, like not a week maybe, but a month or so, reach that target, and you take that profit and you put that into something else. And it's the same thing here. So that's what I would say about crypto. But what I also want to say is that don't get married just to one single market. Like I look at currencies, stock market indices, commodities, and sometimes I trade cryptos. I haven't traded them recently, um, but yeah, I would also trade cryptos. I made some good returns on that in 2017. Because after that 2018 sharp decline, I didn't trade them on the short side because it's not as easy to trade cryptos on the short side as they are as buying on the as trading them from the long side. So that's what I can say. Don't just get stuck with one pair if you're struggling on one asset class. If you're doing good, if you know your Eurodollar as the back of your hand, then you just continue to do what you're doing. But if you're struggling, then trade something else. And sometimes it can even be worthwhile not doing anything. Just letting the market has its course because in the euro, again, nothing has happened. So if you wouldn't have traded this for like a year or so, I mean, not much has happened really. That is worthwhile mentioning. It's just been choppy. Okay, so euro versus the USD. So on May 1st, we said that as long as you trade below, after May 1st, so May 2nd, I said as long as you trade below 1265, I'm going to be bearish. The market moved down and then went all the way up and now moved down lower again. Obviously, we're in this sort of ascending triangle sort of pattern. So a break to the upside here can lift things to the upside. But I'm looking at a 4-hour chart. And a 4-hour chart is less important than a daily chart. In regards to the daily, we're still dealing with a downtrend. So I'm still going to stick with the view that below 112.65, this is a bearish market. GBP versus the USD, I did try to trade lower. I did trade lower. So what I said yesterday is that, because I said here, we're going to probably, if we trade below 29.65, probably going to go down to 129, which we did. Then I said, reward ratios are not very good to be short, so I don't want to be short. Rather wait for the market to stabilize and then turn bullish when we break above one. I think at the time was 129.65. Alternatively, if we take out the low, it's probably going to go lower. So we took out the low, so let's wait. Let's now try to play this to the downside. Now, what people tried to do this morning is they tried to sell this pair when it's already quite oversold. That's, from a risk-reward ratio perspective, not very good. But if it swings all the way back up and then goes to something like 128.87, 129 again, I think people will probably sell. And I think stop loss orders are probably going to be around 129.30. So they risk about 30 pip. If we go down, they make 50. And then if it goes even lower, they'll be making some, that's the wrong tool. They will be making maybe 114, I think it was. 118 pip. Now this is the dollar versus the Japanese yen. Now, if you focus on the 4-hour short term, you're going to see that we're dealing with some sort of inverse head and shoulders, with your left shoulder here created on May 9th, the right shoulder on May 15th, and the head created on May 13th. If we trade above something like, I think, 109.83, yes, this market will probably would have concluded sort of the bearish downtrend, and we could potentially see the market go up to 110.90. However, though, until that happens, I wouldn't pay too much attention to that. And as well, it's a very short-term pattern, so the big picture tends to prevail. So again, no change here to the outlook. I remain bearish below 110.11, and we said a few days ago that if we go up to 109.63, traders are probably going to try to sell. If we move along here and take a look at the price of gold, gold as well is bullish, and the idea a few days ago was look to buy at 12.94, more or less. It was actually slightly lower, but we got that entry and we touched that level 2 times, and it's on the back of sort of risk off. Now we know, of course, the stock markets have stabilized and gone a little bit upwards, so that's why this market, I guess, took a break here and did not trade much higher. But the way this trend looks like, it still suggests that we're going to go upwards. And I still think if we go down to 12.94, people are going to probably try to buy here. Stops are probably going to be just below 12.85. And what's going to trigger maybe that move lower in crude, in gold? It could be the S&P 500. So the S&P 500, I have now lowered that trend defining level a tiny bit. and reinstated that at pretty much 28.53. So what I said, it's more obvious on the daily chart. What I said is that you have all of these days here where people bought. They bought here, they bought here, they bought here, and they bought here. So it spent about 4 days buying at these lows. Now, on the 5th day, on the 13th of May, all of these guys suddenly saw all their positions and losses. People that bought here, either they bailed, but the guys that did not bail, they're looking at their positions now and saying, "Oh wow, pretty much back where I bought just a few days ago. Maybe it's time to, get rid of that position." So I think this, which was support, could potentially act as resistance. So I'm bearish below 28.91, and as long as we're below this level, I think it's fair to be bearish. If we take this level out, probably gonna go up a bit, then maybe a little bit lower, and then a little bit higher, and then probably range trade. So most likely, my course of action is that we trade above here. I'm gonna turn neutral, and then I'm gonna say if we take out this level up here, which is the new all-time high and the 2019 high, then at that point I'll turn bullish. But for now, it's bearish, and I think we could potentially trade lower. It's also forming what could look like a bit like a head and shoulders with head, left, and right shoulder. So maybe creating a right shoulder right now. Not too much different to what you can see in the German DAX. And the German DAX, though, is a bit more evident. If you load the 6-hour chart or 4-hour chart, you see that you have a big head, big left shoulder, and a big right shoulder. And it does suggest we could potentially turn lower from here and trade down. Now, this head and shoulder itself has not formed yet. It might never play out. To get trigger on that head and shoulders, we need to trade below 11,831. However, though, as you know, I've been bearish here for the last few days, and the trend is, at least in the short term, bearish below 12,224. So, as long as trade below that level, I think the market should most likely be able to trade lower. We'll see how it works out. I mean, the last very good head and shoulders mentioned to you guys was the one here, and pretty much went up to the first target that I wanted to see. We had a few other head and shoulders, the one here as well. Left, right shoulder, head. That one moved up, but then pretty much down, and here you would have been stopped out anyway. So yeah, we'll see what happens. Head and shoulders work relatively okay here. But it's not just about the German DAX. If you check out the channel of ATFX, you're gonna see that in the top up here, in the front row, I did an analysis on the Chinese stock market 6 days ago about the possibility of the China A50 creating a major head and shoulders. It still looks like it's creating a head and shoulders. I did a little update on that yesterday on the Aussie dollar as well. So if you want to know about the Aussie dollar, which is really the only thing that is trending, then this is what you're gonna be looking at. Okay, I think we're gonna see if you guys have any questions. Okay, as well. So we have Ronnie Giles from Scotland joining us. Thanks so much. We have Marvin as well, and Anas Dora. Guys, thanks so much for joining me this morning. If you guys have any questions, just put them in the chat box. And guys, if you're new to this, so this is a daily market update we do at 9:30 a.m. London time, and it's brought to you by ATFX, which is a large large Chinese broker that set up offices here in London about a year ago, and they're very, very good at what they're doing. I think I showed you this guys before, but they have some really good spreads. So if you're looking to reduce costs, want to have an ample amount of markets, then ATFX is something to check out. They have something called the Retail Edge account. Now, the good thing with that is that you get those spreads. Most of you guys know me from a large broker that I used to work for before for many, many years. And to get the same spreads with them, you need to deposit 25,000 pounds. Here, it's enough to put $25,000 or 25,000 pounds. Oh, sorry, 5,000 pounds. 5,000 pounds or 5,000 euros or $5,000. So it's easier to get very, very tight spreads with the Edge account. Not only that, you get access to coaching with me So people that open accounts here get access to two 30-minute coaching sessions that hopefully helps you to create a trading strategy and support you in your trading for better success. And we're gonna throw in, not throw in, but we have a premium education course as well that we're going to start. Well, the content is there. I'm gonna probably record it this weekend and hopefully have it up and live in the next 2 weeks or so. And that's available in the client portal. Okay. As well, this is obviously the FCA site, but they're regulated in other parts of the world as well. So the FCA site is preferred by people in Europe, whereas the international versions are preferred by people not in Europe. So you can check that out. There are benefits, of course, with being with an FCA regulated broker, but there's also drawdowns with being with an FCA regulated broker or any European broker for that matter. Got a question here from Ronnie. When do I think the market will start to show good such trending as they used to do in the past? That's a very good question. You see, in the past, historically at least, when interest rates were being raised and increased, for example, like they were in the US, you would see some moves because people will flock into the high yielding currency. And then when you have a president like Donald Trump, which he's brings a lot of new ideas to the table, and is sort of literally shaking the foundations of the world economic system, and trying to mend them for America's benefit. Which again, I mean, I don't have any opinion. I have an opinion about the economic consequences of that. And again, there's both good and bad with all of this. Key point is this, though, is that all of that should have created some great, crazy good moves, but it's not really happening right now. But what could happen with the euro, and this can be really, really interesting, is that there is the Mario Draghi. He's supposed to leave and be replaced. I don't know exactly when he's gonna leave, but I know it's this year. So he's supposed to leave this year, and there's the German head of the German central bank, Jens Wiedermann. He is a hawk, so he is much against all the TLTROs and QE and things like that. Of course, there's benefits to it, and I think he acknowledged that himself. But he's more of a hawk. So what could happen is that, at least from a trading perspective, you want to have a guy like that that will be happy to sort of raise interest rates to keep inflation in check, and will do more sort of aggressive moves rather than some be relatively moderate. Because if you remember as well, like Janet Yellen, she was quite of a I mean, she took it really, really easy. She literally told us, I think, 2 years, 3 years ahead, we're gonna raise interest rates, and then they did increase interest rates, but then they increased it once, and then I think they waited like a year or so, and then they increased again. So they took everything really, really smoothly, slowly, and they're not doing it here. So they're doing it now as well. So replacing him can be a good thing. The other thing as well is that uh, because of the trade wars, the way they are developing, it's quite likely, and we're already seeing bad Chinese data, is that the Chinese economy slows down further. That makes perfect sense. Uh, and the other thing would be here if, yeah, I think that could be the big thing. And if they would introduce tariffs on the reminder of, I think 30 billion, 300 billion dollars, that again could cost the market into some sort of recession. And when we are having those recessions, you'll see the stock markets decline, maybe back to the lows we saw last year, maybe even lower. And then you see as well people taking big positions in pound yen, euro yen, and things like that. So that could be something, and I think that could be it. And then after you have that purge, because it's a purge, you have great opportunities to potentially buy stock markets. Uh, like I don't think it's gonna be a 2009 event, but if we have a global recession and we're down level seen in 2016, then that would not be unsurprising. And then from these levels, if we rally to the upside, you're looking at 55% return. So it's not gonna take 1 or 2 days, or it's probably gonna take 2 3 years, but it will probably go upwards. So that is a good opportunity, and then we'll see what happens with the GBP yen. So that's what I would say. And the other thing would be if we have a trade deal after all, and that trade deal is much better than what we've seen so far. I have some experience of trying to do business in China. With the other broker I was before, we set up a website in English, as you know, and the company itself was setting up offices in China at the time. And this process, it just takes months, and you need to find the right people, talk with the right lawyers. There's so many. It's not easy in the financial sector to do business over there. Whereas as I said yesterday, in the UK, if you want to create a company, an LTD, it takes 25 minutes. It's super easy, and you pay maybe 20 quid, 30 quid, send in a copy of your passport, I think proof of address, and then you're done. You have your own corporation, and you can start to do business. So things like that. If you make it simpler to do business in China, then it can create efficiencies. And as well, maybe, I mean, the Chinese, what they're already doing that very good, but maybe it will be easy for them to maybe do business. I'm guessing. So I think that could be interesting as well. Okay, I think we're gonna wrap things up, and it looks like I answered your question, Ronnie. So yeah, those are the two big things that we'll look at. There's also so recession risk that's very high, and sort of things that can move the markets in a big way, literally purges the system. Because in fact, most of the big recessions, so big sort of turnarounds in the economy, are met with the kind of sideways price action we've been seeing here. If you look here, 2009, S&P 500 going up and up and up and up, and then here, very volatile at the end. The market was down, or not volatile, very volatile, 12%. Reached here in June 2017, and then here in January. Yeah, about 6 months later, we broke support. Then we went up, and there was a real struggle for it to go lower, and then we had that cascading price action. And then at the bottom, goes down, and people try to figure out what's going to happen. I remember this so vividly. It goes down and then goes up, and then when we're pretty much here, that's when all those bears starts again. Oh, the economy is too fragile to go up, or the stock market is too fragile for the economy is too fragile for the stock market to go up. But obviously, you got all the different QEs and all the different systems and the way to lift the economy, and then we sort of get going, and then after a few years in 2012, they sort of realized, come on guys, the economy's not that bad, and we're actually going upwards. So they just buy and buy and buy, very very easy. And then in 2015, again, it was talk about, well, we haven't had a recession for a few years now, we need to have that. And there was some slowdown, and people got nervous again. But then, as you might remember, Donald Trump promised a bunch of spending, and which he did, and lower tax cuts. So then suddenly everybody's like, oh wow, the economy is probably going to grow, and it did grow. And then everybody sort of piles in and lifted the markets higher. But then Donald Trump starts to do trade wars, and then you have this sort of reaction here, and the markets like once again turning sideways as they think that we could potentially have a recession. Okay, guys, thanks so much for watching. So we have 11 people watching right now, but just 2 likes. Don't forget to hit that like button, smash it, help this show trending on YouTube. So if you like it, support it. Sharing is caring. Have a good day, guys, and I'll see you guys tomorrow. Thank you, and bye-bye. Cheers.